This is Shelley Kraft coming to you live on SNN Live. The program is coming to you today from the New Orleans Investment Conference 2017 here in New Orleans. With me today for a Wall Street view is Peter Pham from One Road Research. He's the managing director. Peter, welcome to SNN Live.
Shelley, thanks for having me here.
It's good to have you. Let's get started with an overview of what you do, and then we'll go from there.
Sure. One Road Research is a research publication that's focused on explaining and decoding Asia. We feel like since people are so interested about the growth in Asia, how can one understand the region appropriately? It's very different from what you guys have in the West. And having worked in equities for about 15 years and being able to communicate with many thought leaders, some that are in this conference today, I think what we've tried to do is decode the region and explain it in a manner that's simple to understand and is logical, in which investors can use to implement and identify great opportunities for them.
How do you decode?
I think in order to decode Asia, we must understand the history of the region first. Most of the history of Asia goes back to post-World War II. Right after World War II, many of the countries that you have today, such as, say, China or Japan, came into existence. And the key thing is to understand the pre-existing regime that is now in power and the policies that they've implemented in those countries in order to ensure the growth that currently exists. Now, there's both positive aspects and negative aspects to that, and an astute investor should be agnostic to the conditions and try to identify the best opportunity costs that exist.
Sometimes we have to rely on technical and fundamental analysis. That's not exactly what you're talking about. You have more of a grassroots analysis, am I correct?
It is a grassroots analysis, but it's also top-down and bottom-up, because one cannot deny the influence that the state has in many countries in Asia. For example, in China, which is a command economy, for you to disregard the influence of the structural components of the economy would be a big fallacy towards your investment strategy and approach.
So in other words, what's the difference between your advice, let's say, to an American company wanting to do business in China versus a Chinese company that's U.S. listed? How do you differentiate what your guidance to them is?
I think the key thing to understand for guidance for both foreign direct investment or foreign indirect investment into Asia and vice versa is to understand about how the region grew. And what we've developed is something called the Asian Capital Development Model, which identifies the key things that are important towards a new country. And the key things are the natural resources or natural capital and the human capital, and how you develop those key components, key assets of every nation or state. So once you identify where we're at in terms of human capital development, say if a country's focused on agriculture or if it's focused on manufacturing, such as what China has gone through, what would be the next opportunities that potentially could exist in the service-based sector? So when you look at, are you familiar with the big IT community within India? What's interesting is that there's only about 1 million people that work in India's Silicon Valley, but you have a population of 1.x billion people. So the question is the human capital in a country like that being utilized appropriately? And what are the disconnects towards what's happening in agriculture, which is also a big component of that industry?
So from the standpoint of what you're trying to accomplish, an investor is going to want to know, how do I make money? So what do you tell them then?
I think the way to identify the opportunities that exist is to identify the countries in Asia that are getting the subsidies, the preferential interest rates that exist. Because what happens in these countries, like in Korea, like in Japan, like in China, which have big multinationals that you may have heard of, like Sony, Toshiba, Samsung, and all the new emerging Chinese tech companies, they're getting preferential interest rates. They're getting export subsidies. And to identify the companies that are fundamentally benefiting from these trends that are happening. So when people talk about the excess debt, and one needs to understand is that there's a lot of credit that is fueling the growth, these 6 to 10% GDP growth rate figures. There are some companies that are going to be the benefactors of that. And through our model, what we're trying to do is isolate the companies that are financially benefiting from some of these trends that are happening. And I think that is the true way to understand Asia appropriately.
So now we're standing in the middle of a resource conference with a lot of junior exploration companies. Right. So how do you fit in here?
I believe that within our organization, we refer to Asia as an asset class. And I think that there are definitely hard assets that exist in the region. And sometimes they are trading at multiples way less than what currently exists. So when I take a look at a lot of the mining companies, say listed on the TSX, one could argue that there are fundamentally more attractive and lucrative opportunities within the Singapore Stock Exchange or within the Hong Kong Stock Exchange that provide the same kind of exposure that you need without the same kind of visibility or liquidity that currently exists. And therefore, you're going to have a disconnect between valuation and the opportunities and what the multiples are.
What's your background?
My background is I'm Canadian. So I understand a lot about the commodity space in Canada. And through the advice of someone like Doug Casey, I wanted to go to Asia where you see a lot of growth. And I've spent about a good decade now in the region, understanding, working for various different investment banks, advising a lot of clients, some of the biggest like tier one investment banks like the BlackRocks, the Fidelities of the world. And what I'm trying to do, my sole objective is try to decode the region for international investors so that they don't lose their shirt when going into this asset class.
So what's your sweet spot today?
My sweet spot is an ugly duckling, which is Chinese banks. Now, a lot of people talk about the high debt to GDP that exists, but one needs to understand that the Chinese banks are effectively too big to fail, even more big relative to their economies than even the United States. And one must understand that the banks are central towards all the stimulus. A majority of all the stimulus comes from the commercial banks in this part of the world. And therefore, many of these banks will be bailed out without second thought. And when we look at the history of Chinese banks and how they're able to replenish their non-performing loans, first off, they're really cheap as well, and they're able to always constantly recuperate any inefficiencies that exist within their balance sheet due to the policies of the PBOC and the People's Republic of China.
So how do you make money?
We just started One Road Research recently, and we have a mailing list of about 20,000 people. We'd love for everyone to go to oneroadresearch.com, and we expect to release special reports and an institutional and retail product in the not too distant future. And our reader base, or readership, is an eclectic mix of some of the most reputable people within the industry and also retail investors that are just keen to understand about the market. We also have a podcast which features like Rick Rule, Doug Casey, all the well-known people that are probably attending this conference, and that can also be found at One Road Research Podcast as well.
Let's get some guidance from you for 2018, if you would.
In terms of like a market outlook, hypothetically, assuming if you start to see some kind of precipitous decline in the developed West, what's interesting about Asia is the fact that a lot of them are command economies. Now, politically, one could have opinions in regards to that. But I think about the fact that if you refer to the global financial crisis that happened several years ago, you'll see that command economies have the ability to insulate the volatility. So when you're in a bull market, I love to be extremely liquid and I love to benefit from, obviously, volatility. But when you're in a declining market, one of the strategies I would have is try to insulate yourself from the downside volatility. And therefore, when I think about Asia, I think about markets like China that allow me to put my capital there and to be somewhat disconnected from a potential global contagion.
So let's get your website out there for more information, if you would.
The website is oneroadresearch.com.
Ladies and gentlemen, Peter Pham, One Road Research. He's the managing director. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the New Orleans Investment Conference 2017 right here in New Orleans. Peter, thank you so much for coming on.
Much.